Welcome to the show, and it's a interesting company as we always do. And why is KPI Green interesting is because multiples have squeezed quite sharply, and when you look at the 12-month chart, you'll likely see that 20% lower, and this is despite the kind of growth it's clocked. It's clocked very strong growth over the last 12 to 24 months. The outlook also continues to remain quite strong. 50% growth is the target for FY27 and all the way through to FY30. Large capacity ramp up as well at play, and therefore we'll try and decode this business better. One is, of course, raw material prices have inched up. The management suggested in past commentary that they have enough stock available, and that should insulate them from any raw material price spikes. But at some point that inventory will run out. We'll try and get a sense as to how the management is balancing things and whether the pass-through can actually happen or not. The second piece is Botswana. They've signed an MOU with the government of Botswana for a 5 gigawatt opportunity. How much of that is likely to translate? Can there be more such opportunities which rise? We'll try and get a sense. The third piece is with regard to electricity trading. They've received a license for that. BESS and some of the newer opportunities in terms of newer businesses that they are venturing into. We'll get a sense on what's the capex plan there, when does revenue start to trickle through, and what composition of the top line comprises some of these businesses. The last piece is with regard to cash flow. So cash flow is a problem, debt is a problem, funding is going to be through equity or otherwise with regard to some of the new initiatives and the capex that they're doing. We'll get a sense on all of that as well. But first off, with regard to the company itself, the company was incorporated in 2008, has a market cap of around 8,000 crore. It builds, owns and operates renewable power projects, at least for now. It's obviously venturing into electricity trading and the like. It's part of the KP group promoted by Faruk Patel, who will be joining us in just a few minutes from now. Let's try and understand the story with regard to KPI Green. Everyone knows that India needs massive renewable energy capacity, right, to meet net zero goals, plus the fact that you want to be more energy efficient and energy independent with regard to the country. So what KPI Green does is develops, builds, owns and operates renewable energy projects. It sells electricity and it builds and operates and maintains power plants of those who have got their their electricity infrastructure built by KPI Green. So that's the way to probably think of it. It was started as a solar developer, expanded into hybrid power, battery storage and green hydrogen now going forward. They're also integrated in terms of, they're an integrated renewable energy platform. They have land within the balance sheet. They have transmission and execution capabilities already, but that needs to accelerate. And we'll try and get a sense as to how that will likely play out in the years to come. Let's talk about each of the business verticals of the company so that we understand it better. The first business vertical is IPP, which is independent power producer. It's nothing but when KPI builds and owns the renewable power plants themselves. They sell electricity on a long-term PPAs or to the grid. This generates cash flows over 20 to 25 years. It's a very high margin business, by the way. And this is not just restricted to KPI. It's a high margin business in any case from an industry standpoint. It does maybe 85% odd in terms of margins. Revenue is obviously linked to electricity generation. Asset ownership remains with KPI Green. Now let me talk about the second vertical. That's captive power producer. This is where they build dedicated renewable plants for customers, and customers consume electricity in their factories with regard to the plants built. KPI sometimes provides land as well. Transmission and project execution is what they are really in charge of. There's lower capital intensity because the customer pays for the plant and for the asset, and the asset is in the customer's name. But it's a fast-growing segment, so there's a turnaround time, gets turned around, revenue gets recognized, a margin gets realized, and thereafter what happens is O&M happens. I'll come to the O&M part of it, but first I'll take EPC and infra. Here they design and build utility-scale solar and hybrid projects. It's a balance of system engineering is what they do. The O&M services are provided by KPI Green. Land leasing for renewable energy projects is done by them. And complete engineering solutions for renewable developers is also something that they provide. The last piece, and this is obviously for renewable developers, not exactly CPP or IPP. Let me also take you through the O&M part of things. So here, they operate the energy plants, right? Repair equipment, improves energy efficiency, long-term maintenance of the plant and equipment is obviously required, which is why margins are at 85%. The balance is used for O&M, and that's how the structure works. And O&M is what KPI Green provides to its customers of those who are CPP, which is captively producing power for their own plants, etc. When you're looking at emerging businesses, and here again, it's an interesting set of businesses that they do. Battery and energy storage is one part of the business. Green hydrogen projects is the other. You've got floating solar projects, electricity trading, and AI data center power solutions. All of that is what KPI Green is venturing into. We'll try and understand timelines for each of these and how revenue starts to trickle through. In terms of order book, it's got around 2.7 gigawatt CPP order book, which is from third-party clients. Around 5,300 crore is the CPP order book number, which is large. The tilt is obviously towards Gujarat and pretty much entirely domestic, at least at this point. In terms of capacity, they have an execution capacity currently of around 1.6 gigawatts, which is the installed capacity. 4.6 gigawatts is yet under construction, and the target is to hit 10 gigawatts in terms of the execution run rate annually by FY30, which is a tall ask, right? You'll see 6x growth from here on the installed capacity if this were to play out. Now let's talk about the financials, and this, especially on the top line side, you'll see what kind of growth KPI is clocking. They've clocked a 61% growth CAGR last 3 years. Of course, the number is lower, plus the ramp up with regard to capacity has led to this kind of strong growth, and the need for power in India has led to this kind of growth. Green energy, renewable power. What you're seeing on the EBITDA number also is very similar, so all a thumbs up here. You've seen 1,000 crore EBITDA now coming out of KPI Green, and net profit has grown at 67% CAGR, which is again in line. So broadly, this is the texture of the growth. Very, very strong growth that they've clocked. No concerns here whatsoever. The other piece is with regard to margins, and margins have, as scale has picked up, margins have continued to remain fairly resilient, which is a key positive. Even going forward, the guidance is 30% margins will get clocked, and they've been doing that. So no concerns on that front as well. What is important to understand is the asset composition, right? On the installed side, IPP is around 1 gigawatt. This is in gigawatts, by the way. This is in gigawatts. So 1 gigawatt is the installed IPP. Around 2/3 of a gigawatt, which is around 660 megawatt, is the CPP installed. Still work in progress is 1.6 gigawatts on the IPP side and 3 gigawatts on the CPP side. Mind you, all of this CPP will actually come as O&M also in the revenue numbers going forward. So something to look at. In terms of the balance sheet now, the book value is around 3,000 crores, so this trades at sub 3 times book. You're looking at a borrowing which has gone up quite sharply from 1,100 crore to 4,500 crore. That's a sharp increase. We'll try and get a sense as to what's playing out on the borrowing side of things. Also, the rate of borrowing, because that will impact the interest component of the P&L starting FY27 in a larger fashion, given the kind of borrowing they've done in FY26. Cash bank balances at around 560 odd crore. Whether any equity raises in the pipeline, well, we'll wait and watch, because 2023, 2024, there were 3 equity raises. One was a preferential issue, and 2 were QIPs. So that's something else that you want to keep on your radar. Cash flow. Now, this has been a bit of a challenge, operating cash flow. It's obviously, some of it is stuck in receivables, some of it is stuck in inventory, but basically that conversion is not fully happening. We'll try and get a sense as to what the cash flow looks like going forward. But currently, of course, on the net cash flow side, because of the fundraisers, you're seeing positive numbers. But outside of that, it's something you want to kind of get a sense from management as to what happens. Return ratios have been very healthy. You know, this being said, the ROCEs have been upwards of 20%. Of course, they've slipped below 20 in the last couple of years. But the sense is that as capacity ramps up and picks up, you'll start to see ROCE pick up as well. Also, this debt, the liability side, which has gotten inflated, we'll get a sense as to how that plays out starting FY27 as well, because that will give us a sense as to whether FY27 there's a pay down or a ramp up in revenue and profitability as a result of which are we seeing an increase in ROCs or not. So that may be a temporary blip, but we'll get a sense as to what plays out. Shareholding pattern, 50% owned by the promoters, but there's a 20% pledge there. So something we're cautious about. FIs, DIs hold sub 10% of the company. It's a smaller company as well. And then the balance is held by the public, 40%. In terms of valuations, it currently trades at 17 times earnings. You've got your 5-year averages at around 35 times. The 5-year range is between 8 and 89 times. So you've seen a very, very wide range in terms of price to earnings over the last 5 years, of course. The timeline is also stretched. But broadly, this is the lowdown with regard to KPI Green. Let me bring on board Mr. Faruk Patel, who's Chairman Managing Director at KPI Green Energy, joining us. Very good having you here, sir. Let me first start off, Mr. Patel, by understanding from you as to what's happening on the raw material side of things. As raw material prices have inched upwards, do you have a pass-through at all? Is there a pass-through element with your customers on that?
Number one, thank you very much, and namaste to all of you, and especially
Very
hers
good
to
having
you.
you.
That
Thank you.
see, your question is to be, it is a ramp up for the or the pass through. Of course, is a pass through in a CPP. In IPP, we have closed down all orders when we got the PPA from the government, and we start getting the clearance for the sites and all. So in IPP, we haven't got affected of this material hike. And in the CPP or the EPC, there is a something is passed through, and the other things we have locked in. So of course we have covered and we have safe on that point.
Noted. Excellent, Mr. Patel. Talk to us about execution now on your capacity. You've got a very strong pipeline in terms of capacity growth. From 1.6 gigawatt, you go to 6.2 gigawatt, and it'll be a fairly sharp ramp up. Talk to us about timelines of this ramp up.
4.6 gigawatt in a pipeline, you understand. And out of that, almost you can say 1.6 gigawatt in IPP, and the 3 gigawatt in a CPP. In a both side, we have grown up through the capacity, through the all side is open. And as we all knows that 9 to 18 month is the timeline for this type of project, and we are in well place. And in this quarter result, you will see so many things which we have already completed, and you will see the numbers regarding the pipeline projects are already completed. Few of
You're
them
telling me,
are still.
Mr. Patel, I'm sorry if I'm getting this wrong, but in 12 months, you'll be at 6.5 gigawatt. Is that what you're saying in terms of capacity?
Of course, yes. I'm
Okay.
trying to say this thing, not 100%, but at least 80 to 85% project will be completed by the this year end.
Understood. And you're saying in Q1 you'll already start to see some of those numbers reflect. Is that the right way to kind
Right.
of think of it? Okay.
Yes. Of course,
And
we
both,
will see.
please go ahead, sir.
We will see the execution of the CPP and IPP in the megawatt size. You will see the numbers in this result also.
Okay. And with regard to the ramp up towards 10 gigawatts, how does that play out? FY28, FY29, FY30. If you can just give us some ballpark capacity levels in each of those years that you will hit.
See, 6.254 means almost 6.3 gigawatt is all some of in underlying, I mean, pipeline, and some of already commissioned, and the orders also in hand in a pipeline, also in a very big and strong pipeline. I think by in end of this financial year, we will complete the order site for the KPI alone 10 gigawatt. That is the expectation what we have, and what market required, and what really India wants also.
Correct. And uh, you know, if you can also give us a sense on what is the composition of IPP versus CPP which gets completed. Do you first start closing out on IPP projects? Is there any headwind with regard to IPP projects? Certain clearances that you require, have they come? Are those any of those challenges there? If you can give us a sense of that.
First, we understood that we have today 965 megawatt IPP completed, and pipeline is 1.6 gigawatt, wind, base, and solar and hybrid also. So that also you will see 9655 to something which you will see in this quarter. And of course there always be difficult projects to as you say the headwind, uh, the evacuation and the land, all the things are there, but we have for this 2.5 gigawatt we have completed all the things. And for the next one we are trying to get a good project because it's a 25 years revenue project. That's why we are thinking in this way. Today, out of this 6.2 gigawatt, 2.5 gigawatt is IPP, and say 3.6 gigawatt is the CPP. But it will be same in a position. Why, as I say, same, it means a 50-50 by IPP and CPP we are trying to do in this 10 gigawatt.
Understood. But IPP will require higher capex. And is that why there's a conscious call to maybe focus more on CPP for the moment while cash flow comes through?
Of course, you are rightly tagged that thing that today we have closed the almost all the project financials except the base, and in a future also we will be make sure that how we are going to match the debt equity ratio, and then going forward that is our policy from the beginning. Today we our ratio is 1 is to say zero point 0.8 or 1. Tomorrow it will be same, and that's why we are growing in a IPP step by step, or say very cautiously. But one thing is very clear that IPP revenue and IBP EBITDA and IBP profit will be very nice and sustainable for 25 years, and that is the very good thing in a KPI today.
Okay. You know, Mr. Patel, I'm going to take a bit of a pause on this conversation. I'm going to come back to you. I need to dip into a very quick commercial, mandatory one. But viewers, essentially, we need to try and understand as to how much of O&M revenue is going to be coming in as well. We'll try get a sense of that. Also, execution for FY27. What will the growth rate be if all of this, if capacity is getting ramped up from sub 2 gigawatts to 6 gigawatts, you could well see very strong growth for the next couple of years. We'll get a sense of both of those on the other side of this break. Stay with us. Welcome back. And we're speaking with, of course, Mr. Faruk Patel of KPI Green with regard to the execution plans that he has, both on the capex side as well as on the P&L side. Mr. Patel, with regard to top-line growth, what should one expect over the next couple of years? And will margins likely get better with the tilt towards IPP getting stronger slowly?
Of course, the revenue top line will be growing in a pace what we have predicted, and what we have already given last time also, that we will grow with the 30 to 40% in the top line revenue. At the same time, you will see the bottom line also to be strong and the consistently grow with the same trajectory. We'll try to manage the same thing till 1 or 1.5 year. After that, we will get the more good EBITDA with the IPP revenue, and IPP revenue will start. So in your both question answer is yes. What we have said, we are doing it and we will do.
Okay. With regard to electricity trading, battery energy storage, and new opportunities, including the likes of a green hydrogen, how much of a revenue contribution will come from those, say FY27, FY28? If you can give us a sense of that.
FY27, 28, we will get some base revenue in this kitty. And from the hydrogen, it may take a few time, but it will. We are in a process, and we have completed one pilot project also. So in a both revenue stream, in the battery energy storage system and the hydrogen, we will get the full by 28, 29, but at a part, say 27, 28.
Okay, and are margins largely the same with what you're guiding for, 28 to 30, or do some of these new avenues bring down margins?
In IPP, of course, we will get the same thing till 25 years. But in the EPC, the thing, of course, the competition and the rate of the raw material. But as you know, that KPI have the mixture of EPC and CPP both. Because of that, we will try to match the margin same with these trajectory, in this trajectory.
Right. Cash flow has been one of the concerns for you, right? Does cash flow start to improve going into FY27? If not, then when does cash flow improve? How are you looking at funding avenues? Are you going to do an equity dilution? Where does debt largely settle at? Give us a sense of all of those.
Okay, so cash flow, when we talk the cash flow, if we are, as you know, we are going in a big project with the big companies like NTPC and the CIL and SGVN and Aditya Birla. There is the some billing cycle is a bit long. Because of that, there is a bit dip down you can see in last year. But the project when completion on a completion mode, we will match up the cash flow as before. Number one. Number two, that is not the issue today, but we are not going to dilute any equity in near future. Of course, we are trying to get the good profit from the EPC and putting the debt equity ratio, try to match the debt equity ratio 1:1, and putting new projects in a IPP.
Then the kind of strong capex you're doing, you'll have to fund it through debt. And where does therefore debt settle?
Now, already, as I told you, for a 2.5 gigawatt, we almost got for the 2 gigawatt all that are committed by the bank, like SBI or the other bank also. And we have dispersed that few of the debt, and we already done the projects over there, and already revenue start from this month only. So you can say that that is not the problem. Equity we are not going to dilute, but of course we are going to get the good profit, and then we are getting the debt for that.
Understood. And what is the cost of your debts that you're picking up?
Today the average is a 9 something, 8.5 to 9, vary to vary by the banks.
And that will entirely start reflecting only in the current year, right? Because that will be a large 400 crore interest cost, which will start reflecting on your P&L.
Slowly, you will see, because there is a moratorium period. When the moratorium period will finish, and construction and the things, of course, the debt interest you will see on the balance sheet. But we are trying to avoid the as far as the IDC also, and doing the early commissioning before the timeline also. That also the very strong point for the debt serving also.
Okay. And O&M, that is going to start becoming a larger part of your revenue. Talk to us about when that starts to kick in.
Today.
Okay, I believe I believe we've snapped that line with Mr. Patel. But basically, he's saying interesting things. He's not going to dilute any equity, at least at this point in time. There's no question of any equity dilution. The funding will likely happen through debt. Believe that this is probably the top in terms of the debt funding as well. I'm told completely timed out on this edition of All About Your Company. Of course, plenty to kind of dissect here with regard to KPI Green, lots of moving parts. But a moratorium should protect profitability till the point when IPP projects start to go live. So that is the one big positive also that you want to keep your eye out on. But that debt number has slowly crept higher, probably at its top. Let's try and see as to how that plays out maybe over the next couple of quarters. Completely timed out on this edition of All About Your Company. Thanks so much for tuning in.